Hello class. What I'd like to do for a few minutes tonight is because problem 4-6 requires you to work backwards into the journal entries, I thought it might be helpful to kind of go over that problem with you and set the tone for you for some of your other journal entry problems. In chapter 4-6 you're looking at the city of Rome, and basically you're trying to determine by looking at their post-closing trial balance for 1 year end and for the subsequent year end, and looking at their debits and credits, you're trying to recreate those journal entries. So let's kind of get started. What I would suggest you do whenever you're trying to work one of these is kind of treat it like a cash flow statement, where normally you kind of use cash to solve for later. So let's move past the cash account and let's go down into the information you're given, and let's look at taxes receivable. Alright, you'll see in taxes receivable a debit for $1,880,000. So let's go ahead and debit taxes receivable. Okay, and we're going to do that for $1,880,000, and that's the debit you see for taxes receivable. Alright, if you look below that, you'll also see in the credit part an allowance for uncollectible taxes of $10,000. That means out of the taxes receivable that the City of Rome expects to collect, $10,000 is the provision that they're setting aside for the uncollectible taxes. So we're going to credit that allowance for uncollectible taxes for $10,000. When we do that, then you'll see the difference is going to go to our revenues control account. Okay. The reason we'll do the revenues control account is in the general journal we use, in the general ledger, we always use the control accounts. Then when we go to the subsidiary ledgers, that allows us to detail out what makes up the revenues. In this particular case, we have just the one, so it's going to be a credit for $1,870,000. Alright, so now what we've done is we've handled the debit and the taxes receivable. You'll notice though there's also a credit of $1,828,000 to taxes receivable. So let's go ahead and journal entries for number 2, and let's record that. If you'll notice that credit is to taxes receivable, so I'm going to do that first. $1,828,000. Okay. You'll also know that we've got a debit to cash of $1,820,000. So because that is our revenue source, is through the taxes, that's generating or throwing off cash of $1,820,000. If you'll notice also, if you look at the allowance for uncollectible taxes account, you'll see a debit there of $8,000. So we're going to record that debit to the allowance for uncollectible accounts, because that tells us what the specific amount of charge-offs were during the year. So in number 1, we set up the allowance for $10,000, which gave the credit. In number 2, we have the charge-offs of $8,000 throughout the year for the actual revenue that was not collected or not paid out and became uncollectible accounts. Alright, if we move on down and we look at accounts payable, think about what normally causes you to have a credit in accounts payable. Normally, for accounts payable to be credited, you've incurred some kind of expenses or expenditures. For expenses, we use the term expenditures in governmental accounting. So we're going to debit our expenditures control account. Here again, in our subsidiary ledger, we'd identify those specific individual accounts, and that's your $1,740,000. And we have an offsetting credit to accounts payable. Excuse my typing, please. Okay. For the $1,740,000. So now we've recreated that credit entry. Right, if we also look at accounts payable, we will see that we have a debit for $1,852,000. The way you reduce your accounts payable is by using your cash. want you to notice something right here. If you're looking in your book at problem 4-6, you'll notice that when you look at cash, we just did a credit for $1,852,000, and the credit to the cash account was $1,867,000. They told us that there were no incoming transfers, but there was a transfer out. So that tells us that the other $15,000 that made the credit to cash had to be from a transfer out.